Yo, yo, what's up, everybody? So, yeah, we got CPI today. You guys can see that it already has a pretty crazy delivery. So, we'll take a look at things in a moment. Let's get everything all set up. Yeah, hopefully, you guys have had a good start to your week. So, we can see that the dollar's picked up some strength here. Again, there is a bearish seasonal influence. ICT slogan, sell-in may go away, right? So we may end up seeing that be the case. We are seeing a change in state here. So that's interesting. It's a bearish order block. Got a fair value gap here. First and foremost, when we started the week, I pulled your guys' attention to this. I said that there is definitely a chance for us to get down there. We've taken out Sunday's low, took out previous day's low, right there. So now we're going to have high resistance if it wants to try to pull back up in between that and try to target the highs again. We have a pretty large stop run. We do got trend line liquidity here, so if it gets from here up beyond this new week opening gap, I think it'll be able to slide through that. It is consolidated, but the failure swing idea makes it more low resistance. So we'll see what happens. It's still just a retracement at the moment. We're going to have to close below this in order for me to believe that price is going to dig even deeper. But the dollar being pretty aggressive like this, I mean, that's pretty interesting. Go to the dollar here. I wanted to see if we can get this taken out, but it seems like price is having, at least for now, a different plan. Remember, we have all of this that's imbalanced to the upside, right? We got sell side in that little gap, but it's still imbalanced to the upside. So, maybe it wants to try to run up there. Again, we're not just going to assume anything. We need price to really show us, obviously, what it's trying to do. For now, the dollar's just coming back to the middle portion of the range, right? That consolidation. So it's not necessarily the greatest condition right now. CPI, right? So that's typical. We do see that the currencies are now rejecting. There is SMT, both here and here. So if the dollar starts picking up and just racing to the upside, then we'll end up seeing the bearish seasonal influence kick in. So just some things we got to pay attention to. Again, this is a bearish breaker, low, high, lower, low. It's also a bearish order block. So we will see what it wants to do. Yeah, do you guys have any questions? Okay, hopefully you guys have had a good week so far. Go to the 5-minute chart. We are getting somewhat of a rebound here. So stop run. Got relative equal highs there. We're inside the new week opening gap for the S&P. bullish order block. So we'll see what happens. It's kind of 50-50 in here. Are they going to continue, or are they going to use this order block? We have to lose this low and lose this order block in order for me to think, okay, these equal lows here will get targeted for the S&P. That looks pretty damn obvious right there as a target. If it does choose to give it up and break down through this low, then I'd look at this as a market maker sell model. So we'll see what manifests here. We got buy side, sell side delivery. If this is going to be bearish, it should not come back beyond this. This is also a completed market maker sell model. So big purge. Seems price is trying to rebound. Still pre-market open. I don't like the amount of equal lows that have been just left available on the S&P and the Dow. So yeah, we got equal highs here. Do we have any other news event? So yeah, the Fed chair nomination vote, they actually already confirmed him. So he's already pretty solidly confirmed. So he is generally a person like him, the Walsh, whatever the heck his name is. His type of persona and what his goals are is very bullish for the overall market. So yeah, that'll be interesting to see what they decide to do. Let's go leave this on the 15-minute. Again, there's a gap in here. It may want to come down into this one. But again, this is all, if this was like the 5-minute chart, this is literally just a retracement. And we need 3 PD arrays to be violated to the downside to get away from this continued buy side delivery. We can't just use the order block at at some level, right? Some key level that doesn't even have a PD array. And then just assume we're going to pick a top. We're not going to do that. So it looks like it's just going to continue, at least for now, right? The daily open price is here. So basically London has swung lower. So again, if this can get up beyond this accumulation, we should have a very easy ride for us to get through back through the highs up there. Got a 1-hour change in state of delivery here. So if we can get displacement beyond that, I think that'll be worth paying attention to. CPI is a one-sided news event. On the lower time frame, if we go to the 1 minute, we can actually see a market maker buy model unfolding. So that 1-hour change in state. We have the accumulation in here. We have another accumulation in here. So we shouldn't see it come back down into this too deeply if it's going to be bullish. And of course we have this here. So it should stay in that upper 25%. We should just keep going if it's going to be bullish. This was just a retracement, at least for now. Got that 1-hour change in state, relative equal highs up here. So yeah, clearly price wants to get up there. Okay, we're in no rush. Good morning, George. So we're going to have to stay above this level. See, there's the candle right there. So if it's going to be bullish, this wick here plus this accumulation, it's going to have to hold and be very sensitive if this is going to complete this market maker buy model. Consolidation, accumulation, reaccumulation, smart money reversal. First stage distribution, we kind of blew through it. Second stage is up here, so this retracement should result in a fast reactive response to that buy side delivery. There's another order block there. So we should see sensitivity there. High, low, higher high. It's also a continuation breaker. We're approaching the macro too, so that macro may be used to get us up and spool to the liquidity up here. We've already taken stops here. 1, 2, 3 drives, reversal. This wick in here, it's going to be very significant in terms of us continuing to trust that we should be able to continue to go higher. Because this large wick followed by displacement, that's a balanced price range. So we'll see what happens. Keep that in mind. I'm going to run to the bathroom real quick. Give me 1 second. All right, we're back. Appreciate you guys' patience. So yeah, I believe that we should be able to get up here. We'll see if this can break down below 50% of this, then we'd have to obviously reevaluate. But I think that these equal highs up here are very, very easy targets. Still bullish. The dollar, unfortunately the dollar is kind of going against it. So Makes it a little bit less high probability. It's low probability, honestly, because it's CPI as well. We're kind of stuck in this little consolidation for dollar. It is pre-market open as well. And CPI has pretty rapidly repriced us up. So again, we are seeing sensitivity to the upper 25% of this wick. So I'm still of the opinion that we should be able to get this to run up into this level, especially right now because it's inside of a macro. Go to that trend line liquidity. But we'll see what happens. So I'd say that if we close down below the midpoint of this wick here, that may be a cause for us to then try to seek further sell side. It seems that we just basically filled in this whole 8-hour fair value gap. And now it's giving us a response in here. So depending on how it reacts to this, it's going to be significant. Because we do got accumulation, possible manipulation higher, and then distribution if it does end up wanting to go lower. But again, we don't pick tops, so we're not just going to assume that the tops have been placed and start really aggressively seeking shorts. We may see that unfold, but again, we need some time to be able to fully justify that the buy side delivery is going to be off, because again, this could very simply be just a rally up to then retrace. So external taken to internal that may continue to go higher. So we do have a pretty rapid stops delivery back to stops. So again, if this retraces into this, respects it, and then starts to break lower, say we violate the midpoint, and then price starts to use these fair value gaps as inversions, then that may be a problem for continued buy side, especially with the seasonal influence being bearish. Sell-in may go away, right? We're approaching the summer months too. From June, July, August. So those are things you want to consider too. So conditions get a little bit more challenging in the summer. So you don't want to be sporadic and do too much during those times. You could obviously still trade. It's not saying you shouldn't engage, but you got to realize that conditions shift. And if you don't know how to experience them, right, or engage them in a safe, effective manner, because you've done it for a long time, you could be met with some difficulty that can give you this false perspective that, you can't do this, or it's too hard, or whatever the case may be. When in reality, you just engage at certain times in a condition or time period of the year that is a little bit more challenging, and you should expect it. Not be fearful of it, but you should expect it. So, given that there's a new Fed chair now, that may cause a little bit of different type of price delivery than the norm. This year has just been absolutely untraditional. I mean, you just look at the weekly chart, it's just straight parabolic. But again, my main assumption today, just so we're very clear on what we're looking at, I want to see the upper 25% of this wick get respected because we took stops. This is also, again, inside of a large PD array, right, the 8-hour. Let me actually fix this. Yeah, I think we'll just stick with the 8-hour. So again, if it gets above this, we're already in a level that makes sense for it to want to get up there. The only problem is it's pre-market open, and CPI is one-sided. So generally, when it gives you that breakout towards one side, especially if counter liquidity has been swept, and we have a solid response and a logical reason to target a very obvious target like this, being the equal highs. We have multiple layers of equal highs here, here. This did take this stop, but it's still relatively equal highs in there. So I think those are going to act as magnets, honestly. And yesterday's closing price, we have a regular trading hours gap above us. So it's just all the more reason to expect, especially if this holds like this, all the more reason to expect the price should still be interested in going to the buy side, given the higher time frame narrative. So that's what we're going to stick to until proven otherwise. What proves us otherwise? The S&P breaks down aggressively towards this, breaks this low, gets below these levels, closes below the midpoint from this high to that low. That really puts us in position to target something like this, these equal lows. Then we got, for the Nasdaq, we got the lows down here, relatively equal. For the Dow, we got relative equal lows here too. Again, that's contingency. We're not going to go against the higher time frame bullishness at the moment, especially with this, right? It seems like what we've mapped out, it's pretty much working out. So the question is your model in this price delivery here? But we should be able to hold this and then race to the buy side, given it's inside the macro. And again, this is a market maker buy model. So the underpinning is that framework. So we should see a very quick, sudden movement here, getting us up there. So considering this may be the second stage, right? We should not see price come down into this. Pre-market is pre-market, right? So a big wick. Again, if it gets above that wick, it's going to act as a balanced price range. I don't like these equal lows. I just really don't like it. And we're kind of sideways. So it's just CPI, right? So we'll see if we can get that sensitivity to get us above these equal highs. And then if they run up above these highs, take the highs, and then start to rapidly turn around, and dollar continues to go higher, which it's doing right now, that could be problematic for us to target deeper buy side. We may spend a little bit more time, given the seasonality being bearish. It may spend a little bit more time trying to go lower a little bit. So we'll just see how things unfold. Again, keep your eyes on this. I'm looking to see if we can get up here. Yeah, it's having a reluctance to try to get up there. So we'll see what happens. Again, being that there's this large wick here, the interest for it to go down there, I wouldn't want to see that. I wouldn't want to see it try to come back down into that, because if it does, say it like really smashes into that, maybe it comes to sweep this out, right? That could be reasonable. But if it just starts ripping through and closes below the midpoint of this, that puts my attention down to these lows and possibly this secondary layer of inefficiency here. And this will have all been just like manipulation. But I'm not going to assume that just yet. Still got my attention up here. Again, if it breaks through this level here and closes below that, that'd be just yet another reason to not trust what's happening in here to the buy side. But you know, this is healthy in here. There's nothing really negative going against this as the draw. And again, we have this 1 hour order block, pretty aggressive overtaking of the change in state here. So again, this should be fairly sensitive if we're correct, right? And it's going to go up here. So we'll see if this macro can deliver us up there. Again, it's pre-market, so it could just mess around. It's always the risk that you take trading pre-market open. You want to be very nimble. I don't think that's too large of a target. It's 30 points. And then however it delivers up here, if it does get up there, right, like say it sweeps that and then just like blows up to the downside, then we know that that was all manipulation, and then it'll come down and we'll have our attention here. But again, there's a huge regular trading hours gap above us. So we're basically going to be opening up at a very large discount relative to previous day's close. And many times price likes to run back against that, even if it doesn't go all the way up because it's so big. You know, if it's bearish, it should be sensitive to those levels as well. See, the previous day's close was there. $22. So yeah, it's a freaking massive discount. Massive discount. It's like over 100, over, was it 200 points? Not quite. 167. Yeah, pretty sizable wick in here too. It's the daily wick right there. Again, we're in that small market maker model, so we'll see if we can get it to respond. And this could just be a stop run, relative equal lows. Where the hell is my... Oh, there it is. So yeah, and if we get above this here, that'll be even more, well, this is the regular trading. Let's go back to the actual electronic trading. See, if it was to open up right now, that's how big the gap would be. So that's huge, right? And 50% is up here. So if you take that and measure it out, at least for now, if it was like hypothetically to open up right now, you have the midpoint in there. So that kind of encapsulates all this liquidity that we've just laid out. Price seems like it wants to get up there. It's slow and steady though. Looks like it's really not in too much of a hurry. But hey, again, that's what you should expect when you're trading pre-market open. Sometimes, obviously, it'll be quick, like when there's a news event. But most of the time, pre-market, even through news events, can be a bit more chaotic, a bit less reliable. So we will see what it wants to do here. So far, everything's moving towards that level, like I said it would. Because of CPI, I'm still going to wait. Whenever there's like FOMC, NFP, CPI, any of these news events, it's best to most of the time wait at least an hour, like 30 to 45 minutes to an hour. Let all the gamblers go in and get wrecked. And then you go in and pick up where they left off with whatever they left available. So you can imagine that all these people that got in early, they may want to come down, sweep them out. Ideally, though, if this is going to be the market maker buy model that it looks like it is, right, it should continue to hold like this in this level. But the dollar strength, could be somewhat of a problem today for continued buy side delivery. See what happens here. It's coming off that high a little bit. See, you guys got any questions? What do you expect the market's going to look like after CPI? The report wasn't that bad. So the report, all the data that comes out is late. It's just like a red herring, right? It makes everybody think, oh, the news, let me go see what the news is going to do. The news is just a volatility injection. Everything's already pre-planned. They already know where they're going to run to. We just get the data and it's already like late. That's why there's insider trading and how they position themselves before. It's because the news already comes out. It already gets priced into the market. And then once the news comes out, it's just an excuse for them to manipulate the crap out of the whole market and many times shake you out of positions, get you thinking the opposite, just for it to turn and go to where the higher time frame was reaching for. Right? So all the data, I don't really pay attention to the data because you'll find like a numerous amount of things where it'll have positive data. It should move the market up, and then it just totally falls out of bed and goes lower, or vice versa, right? So that's always something you want to think about when you're looking at news. you just use it as volatility injections, right? You go off where the higher time frame's headed, and then you just use it as a time where volatility will be present, right? Scheduled. In the upper 25%, we don't want to see it break through that. So it's okay if it wants to come down here, stop these people out. That's great. We may very well see this turn into what I've called deferred liquidity, right? Still consolidation. We do have relative equal highs, so it should be able to get up there, but we got a stop run here. So price is trading into that. It's also a bearish order block, right? Consecutive up candles. So it hit that. Instead of it going through that because it's high resistance conditions right now, it's breaking down to come and sweep out liquidity first, right? So if it is going to continue to go higher, we're going to have to see a response from this. We should not break all the way down like that. Like some people will think, oh, well, isn't that a discount? Yeah, well, they don't always come to a discount. They don't have to. It's not required, you know? And price has not really cared about discounts at the moment. It's just been so parabolic, which is why if we do start to see signs that it's going to go lower, like in my mind, if we break down below this fair value gap here, say it gets down through that, it uses it as resistance and can't even really break through it much more, then again, we have to immediately move our attention to this. We do got this bearish, bullish order block, but if we just start losing PD arrays while respecting things like this, that's a bearish order block. We'd have an inversion fair value gap if it chooses to close down below. And again, early signs, it's going to be like this being violated. Because in this market maker buy model, this little one, this is the second stage, right? It should be second stage distribution. So we should be able to see a fast movement away from it. Because it's pre-market though, you have to, again, expect that things may be a little bit unorthodox. They may be a little bit more lethargic, unwilling to really get you to your target because you're in the phase of manipulation. Accumulation manipulation happens before the 6:30 open price, right? 6:30 a.m. Pacific Standard Time. I mean, at certain times, premium and discount is obviously important. Higher time frame premium and discount is also very significant. But you got to kind of just gauge what the condition is, because if it's a very fast market, it's less likely that it's going to get to a deep discount that many people look for to buy low or sell high, right? So just some things you want to consider. Quarterly cycles. I mean, if you're talking about like every quarter has its own quarterly shift, and do I gauge off that? I absolutely do. Every quarter also has a power 3. For the 3-month power 3, there's a 6-month power 3 for each candle, each 6-month candle, 3-month candle, 1-month candle, 15-minute candle, right? But higher time frame wise, that's the cycle, quote unquote, that I use. And then of course I mesh that with seasonality, changes in state of delivery and whatnot. So yeah. Q2, 3, yeah. So yeah, I use a version of that for sure. Every year I also talk about power 3 on the yearly perspective, and this year it pretty much did exactly what we thought about, what we were mapping out. Last year we picked the low of the year. This year we were able to confirm the low of the year around the same exact time, right, which is like late March, early April. If you go back from the last 10 years and back test this, you'll be pretty shocked at how common that is, how easy that is to get in front of. If you can couple the decline going into March and April with a monthly, quarterly, yearly higher time frame order block or fair value gap, or a low, right? Some, just some PD array essentially. Then if you can get a change in state, preferably a double change in state, which is something I teach here. And then that's fully confirming order flow. works pretty spectacularly. And we have the last couple years to prove proof of concept. So it's definitely worth considering, you guys. Oh, nice. Hey, I appreciate that, brother. I appreciate that. Sincerely, I appreciate that. I'm glad you're finding value. If this is your first call too, you're just getting started. There's so much stuff that we talk about here, and I try to keep it as simple as possible. So yeah, we could see that this is now back to, at least for this moment, respecting this. This is a bearish breaker. So if it was going to be bearish, it shouldn't come all the way up into this deep level. I mean, it could, obviously, if it's high resistance, deep retracements are necessary. But at the same time, you know, if it's going to be bearish, we'd rather see immediate sensitivity to the lower 25% of whatever PD array it is that we're using. Like in this case, if this low, high, lower low is going to be a bearish breaker that we're going to use to try to seek further sell side, even if it's short term, we still need to see sensitivity. If it doesn't show that, and say this candle, or oh snap, this sound threw me off right now. The sub sound. I was like, whoa. Thought it was my phone. Whoops. But yeah, so the upper portion here on this breaker, that was an unsuspected sound. Made me jump a little bit. Holy crap. Yeah, no worries, bro. Appreciate the interest. But yeah, like I was saying, if this breaker, right, say this candle ends up pushing price above this in here, again, we're in that market maker buy model that only turns invalid if we break back down below the 50% here. Because once you're beyond, like in a buy model, once you're beyond the 50%, it's very, very likely, if you're correct on narrative, the price is going to continue and finish that off, right? So if it fails to do that, right, and it breaks from, say, here back down below the 50% of not only this market maker buy model framework, but also the 50% here from this buy side of the curve, right? That makes it more likely that it's then going to try to come and take this out. Because we should not, once it leaves 50%, in like this example for a buy model, once we're above that 50%, it's not expected to come all the way back down. Because if it does, that means that we're not in a very strong market maker buy model. And you may see your trade get upset, right? And if it stays above it, right, we got that second stage distribution, it should stay above those levels. It should not violate this, because the sell side of the curve, when you look at these accumulation areas, they should be treated as inverted balanced price ranges on the buy side of the curve. Because things that held up as balanced price ranges to continue to push us lower, like this did here, right? You see how it respected it? When it overtakes it, if we're correct, the price is going to target this buy side liquidity. When it trades back down into that, especially if we're above 50% from this high to that low, we should end up seeing price hold it as an inverted balanced price range. And if we can get this to get above the breaker here, it'll be used as an inverted breaker as well, because every PD array has an inverse nature to it. So we're seeing a little bit of a reluctance here. Kind of got SMT, so it's kind of a concern. There's SMT here at these highs as well, so we gotta definitely pay close attention to what's going to unfold here. And again, if this ends up getting aggressively through down to this level, see, do we have accumulation on 30? Yeah. So if we do end up seeing this breakdown and it closes below 50%, we may see this turn into a market maker sell model. I think it'll be high resistance though, because again, we have a stop run here. We had 1, 2, 3 drives that resulted in the bounce higher, and we're inside this 8-hour fair value gap, which is where this is unfolding at. Right, this low here is the low of that 8 hour. So we're still dancing around that level. If we were to take that and measure it out, 25, 50%. Let's actually measure this out. So again, that level right there is something that we do not want to see targeted if it's going to go higher. Again, with dollar being so bullish, it may cause a reluctance for the indices to want to really give it up to the buy side still. And we've been so parabolic, and we're in a time where there's a bearish seasonal influence. So again, you know, we're in a time where it could be seen to go lower. Seasonally, it should go lower, right? And if everything starts to align intermarket relationship wise with that perspective, and then again we start losing levels to the downside, like this midpoint here and this wick, right? If it doesn't treat it as a sensitive balanced price range that's bullish, you know, we have to be allowed to be flexible. But you can see why I didn't want to engage, right? We're observing this, so we should wait till 6:30 comes. It's probably best. And we could see that it's stalling out in here. So I think it did offer like a small initial run. Like say you found something in here, you're like, oh, I'm going to use that wick as my discount array. It did offer 30 points off of that. Again, if that's not your model, then you didn't miss anything. It just made a move. But I like these equal highs up here if we can get it. We do got to now start to gauge levels like this. Because now we got buy side, sell side. It's our order block. We have buy side, sell side, breaker being held. So it's starting to show, at least for the moment, bearish PD array is holding price. So again, if it gets so aggressive and gets down to this level, you know, again, it may look to want to come and blow this out. All of this could have been just fake. We'll see how it reacts, right? We're going down into a little bit of a discount relative to where price is at. We still got those equal highs. You know, one of the issues for this to go higher is obviously the SMT. But again, you know, we still haven't given up this 8 hour fair value gap. So any assumption that it's going to go short, it's just an assumption, right? It doesn't really have enough context backing it up. The dollar is becoming a little bit more convincing in terms of the context backing up the indices going lower. So again, this is a moment where I would want to wait for more information, right? We did take stops here. Now we're observing order flow, right? It's all we're going to be doing, right? In this instance, the buy side did not engage aggressively in the macro. It seems that it's setting up a decline while we leave the macro going into the open price. If we think about, where's the open? The open for the day is up here. Again, this is a fast London, which I would classify this as a pretty fast London session, wouldn't you? We had a fast Asia, very quick Asia. So lots of work was done. So again, that could end up becoming an issue when it comes to the AM session. Fast London, fast Asia, merge those two together and you end up having a problematic AM session, especially given the fact that it's CPI today, right? The whole week is going to be influenced by, you know, CPI, because CPI is one of those big time news events that really drives the economy or tells you what the sentiment is for the consumer, which then indirectly affects the economy. Well, in many cases, directly, right? Tells you how many people are buying things. Yo, is it cool if I call you Pingo? Spingo. It's a cool name. Spingo. Hopefully that's cool. Yeah, do you guys have any other questions? We got 10 minutes. So nothing to see here. Right, nothing to engage, so you got to be patient. Not every moment is a time to take a trade. Just because you get into the market doesn't mean, well, just because you're watching the market doesn't mean it's time to trade. This is actually a reasonable idea because now they're retracing. Again, as long as they stay above the 50% in here, right, from this low to that high, we should be good to keep seeing this go to the buy side. At some point, I would like to see the dollar decline, but look, we're in a consolidation on the dollar. So that's a risk, right? It adds risk to the marketplace when you're trying to engage because it can throw off what's more likely to happen versus another situation. You know, you may be bullish, but if the dollar's bullish too, that's a cracking correlation, right? Sheesh. The yields are rallying here. Okay, it's going to have an impact. The rallying yields, declining bonds, that's definitely going to have an impact. So again, I would say that if this does get below that 50%, we're going to quickly adjust. Oh, wow. I did the markups on the wrong chart. This is the one that I was supposed to do it on. This is my clean chart. Supposed to be. Guess we'll invert the roles here. So with the declining yields or declining bond market and rallying yields, this drags the dollar higher. I mean, you could see the influence it's already having. It's pulling the dollar higher. What could it be reaching for? We got the gap in here, right? It's a void of liquidity. There's nothing on either side. So it needs to repress into that to be efficient. So maybe they look to trade into that a little bit. Then if we could start to see a decline, again, we still got these equal lows. But again, if this high gets broken, right, that's a high, low, higher high. We may see that turn into a breaker. It's also a bullish order block here. Let's get the daily bullish order block. Definitely some stuff to keep in mind. We got a high here, low, high failure swing. Price takes out this high many times. If we're at a reasonable level where it could retrace, that's what's called a type 2 dealing range. Whenever that gets taken like this, so there's a low that forms, runs up, creates a high, creates a failure swing after a stop run. And then we displace through that high. That's generally what ICT classifies as a type 2 dealing range. And when that unfolds, if you're correct, and it is going to in fact hold that because there's a reason for it to turn, which seasonality could be the reason, right? That we end up seeing this turn and then target this. But whenever it takes that, it's really likely that they'll come and try to take this out. If it's in fact bullish. If it's bearish, you'll see this fail and then it'll break down. I have like 1,000 people texting me this morning. I don't know what the problem is. Just put that over there. So yeah, we got the Dow. The Dow's definitely problematic. Pretty problematic right now. So we've got 4 minutes until the open. So I'm very curious to see. If we break the midpoint here, I will immediately turn my attention to a market maker sell model. And then we'll go from basically the buy model to then seeking short-term sell model. If we get below this 8-hour fair value gap here, we may have to allow for price to try to dig a little bit deeper. But again, the only time that I'm going to be considering that price is going to turn entirely from like a larger perspective is if we can really smash through this level here. Because we do have this as a gap here. But that is a gap. But we have this large wick. When you have a large wick like this with displacement, again, like I've said before, that is a balanced price range. So if it's bullish, there's no necessity for it to go down there unless you're wrong and it's going to be bearish, right? And many times if something like this fails, like you can imagine, right? If this went higher like this and then it sent another bearish candle that then overtakes it to the downside, I mean, that's not necessarily showing that this is a bullish balanced price range that's to be trusted, right? Most of ICT's PD arrays, for those that don't know, are a variation of different balanced price ranges. If you go back and study order blocks, breakers, fair value gaps that overlap, right? Like with buy side and sell side, like in here. If there's a little gap in there, right? So this little gap in here followed by displacement or another gap creates a balanced price range. So when price comes back into it, it respects it, right? So that is a very vicious bounce around right there. You may see this just act as a retracement. This right here, this whole move going lower. So we'll see what happens here. We got change in state here. Aggressive break above that bullish order block. So we got a high, low, higher high. So again, if we're going to trust that this is going to go higher here, going to have to see these consecutive candles hold. And if it gets below that, that turns to inversion, and then it should be able to continue to drop. But my underlying objective, because it hasn't been upset yet, is bullishness. This just could simply be a retracement. It's Tuesday. Tuesday and Wednesday sets the low or high of the week, right? So we can very easily see that this was just simply to set the low of the week and then continue with the buy side delivery, given the fact that, you know, the Fed chair and interest rate cuts are coming and all these different things. This stuff is positive. Plus we got equal highs. Plus the higher time frame hasn't been upset yet. Higher time frame narrative doesn't change dramatically every day. Bias can change every day because you got to consider consolidation, retracement, expansion, consolidation, retracement, expansion, right? So in one day, you could be in the displacement on the daily chart, but the next day it could be a closed candle because it's looking to retrace. So the narrative is one thing, but the bias can be different, right? Within that main narrative. But the important element is to identify what the narrative is. Where is it really reaching for? What is it really doing? So then you could know when you're on the lower time frames and you see something like this, you're able to then quickly get back in line with the narrative, right? Although the bias may at times go against that narrative. Does that make sense? We got our regular trading hours 50% up here. Very curious to see if we can't get it to come up there. Okay, so that was a nasty up and down movement right there. 630 came out and now it's breaking down. So again, we got our level in here. So my interest to want to go higher kind of began again here, but now with this, I'm pretty solidly looking at these lows here, breaking through our level there. So remember what I said, breaking through that level, if it closes below that, that's a problem for buys, and we may look to see this go a little deeper. And this is a pretty clear indication that it's probably going to put this in jeopardy. It's a breaker here, but it happens so quick. You know, nobody really has a chance to engage something like this. And it's right at 630. There's no reason for you to execute right at 630. But this here, right, we see this little area of accumulation here. It should be very sensitive and hold if it's going to be bearish. It shouldn't come all the way back up. That's a distribution area. We got one right here. Well, I guess you could use this one, a little more pronounced. But if it's going to be bearish on this lower time frame, it should, on a closing basis, get back below that fairly quickly. This is the high and low of that down candle in this up delivery, which is accumulation, right? If it's going to the downside and we overtake it. So we move up in time frames. Let's see. So that little level we identified, it's going to have to be sensitive. We came all the way back to this breaker here. So if it's bearish, this is going to have to hold. So, and again, buys are not going to be on the table until we start really pumping up a little more. I'm not picking lows, picking tops, but that right there looks like a pretty solid delivery for a breaker. Dollar's going higher. We're just too close to the open for me to want to execute. Watch this up delivery here as a bearish order block. Remember this little level I highlighted for you guys. It should be sensitive if it's going to go lower. Again, we're in a range. Got to be flexible at the moment. There's nothing in here that I'm willing to engage. What I can see is we clearly set these equal highs here. Maybe they come back later to pick that up. We'll see. It's too all over the place right now. I know everybody always wants to take a trade, but you got to learn to relax, right? You know, let price speak to you. You know, if you enter the market and you're like, oh, I don't know what's happening, that's your clearest sign to just wait it out, wait a little bit. And being here, you guys learn how to catch continuations. So you really have no excuse to be like chomping at the bit, like hurry up, I need to get a trade or I'm going to miss something. Because even if you miss something, we teach protocols to get in line with a market that's already moving. Like in this instance, if this breaks below this, all you need is a return back into that, and then it should be able to send it lower. Right, so that breaker's the best entry if it does look to go lower. Again, this is too close to the open, so I'm not encouraging you to take a trade right now. But this is something to observe, right? And if it leads us into the macro and price ends up breaking through this low, this is a bearish order block, right? Buy side, sell side. So if it's bearish, it should hold that as a balanced price range, aka a bearish order block, or just an order block or a breaker, or a number of ICT PD arrays. Right, we got buy side, sell side. We have an order block plus a fair value gap that's overtaken by another displacement. So this level in here, we can clearly see accumulation, manipulation, distribution, rebalance. Now we're in redistribution if it's going to be bearish. Right? We got accumulation in here, manipulation. If we can get distribution that breaks this low, we'll look for rebalance, then redistribution to try to target deeper sell side. Yo, what's up, Mark? So yeah, let's watch what it does here. Flip around. I think we got SMT at the lows. Oh man. Yeah. Pretty wild. Again, we're at a massive discount relative to yesterday's close. So keep in mind, if this high is taken, and we can see dollar hopefully get reactive to the downside a little bit, we would be able to then buy if it gets above here. But yeah, this right here, it's not on the table until we get up here for buys. We're definitely not buying in here. But again, we have accumulation, manipulation, distribution, rebalance. We're getting redistribution in here if we can get it to hold this. We got another change in state of delivery. So it should be very dynamic and push price down below that if it's going to be bearish. Yeah, you notice that little level that I highlighted on the 30-second. Look at the body closures as you move up in time frames. It's showing you respect to that level. We got low, high, lower, low. This is going to be a bearish breaker. This should be very sensitive if it's going to be bearish. Buy side, sell side, balanced price range. You want to look at balanced price ranges like this, right? There's a block of balanced price delivery there, a block of balanced price delivery here. If it's going to go lower, it shouldn't come back to the midpoint. Right? And then the same thing just keeps happening until you hit a liquidity pool. Right? But yeah, this is nasty. Do you want to be a part of this right now? Like, does this like scream your name, like get into a trade? Of course, if you trusted this breaker and you were a little bit aggressive, you could have probably caught an entry there, stop above the breaker candle high, or the breaker downside delivery high right there. So low, high, lower, low. Stop goes above there, it would have been safe catching a short going down into that. Aggressive, breaking the rules, where we're not taking trades right at the open, but opportunities there. Buys only kick in when we get up above here, like I said. And if it gets down below the midpoint here, I said you got to pay attention to the likelihood of it possibly going short and targeting the lows here. And all of this will have been fake pre-market manipulation. Again, notice this level, how it's being sensitive. I didn't just point that out just because, right? We were in a buy model that clearly failed, right? And now we're below this 50%, turning this into a sell model. It's just very nasty in here. But it should, overall, respect this if it's going to go lower. And it seems like it's doing so. We have accumulation, manipulation above that, distribution, rebalance is what we should be in right now. And we should get redistribution. And if it can distribute through that, again, we have our low, high, lower low being a breaker. You also have this one here, low, high, lower low, rebalance. In all honesty, we don't actually have to get up here anymore. For this price leg, we were going to have to get up here. If this gets above this high here, that'll be enough. Because then we have a high, low, higher high. Let me actually put that in our crosshair real quick, just in case. If it breaks up above that, then again, we got relative equal highs here that were intentionally left. That would then put me in position to try to target this level up here, being the regular trading hours 50%. Again, it's just chopping around back and forth, so you don't want to be aggressive right now. Getting up above this too, that'll create a market maker buy model in itself. High, low, higher high, right? Lower to go higher. So this area in here would be looked at as the accumulation similar to this. So we can actually move that off now. Now our new accumulation is over here. So if it gets above that, it should not come back down below 50% of it. So yeah, watch that right there. Watch the sensitivity here with this level. Should be able to stay in that upper 25%, and it should fling itself through to the buy side if it's going to go. Damn. Yeah, we got some nasty weakness across the different assets. So Nasdaq seems to be doing whatever it wants to do against the interest of the others. But looks like that held up. Yeah, took out that liquidity there. Again, there's an argument for that to have been an execution. I told you guys to watch it. It just depends on you. I'm not here to put you in trades. I'm here to put you in situations where you can make a determination on your own. And if it fits your model, if it's something that you're comfortable with and it makes sense to you, then you make your own decision. I'm just trying to be a guide. I'm not a financial advisor. Anything that I take trades on can lose, just like anybody else. But luckily, for the most part, we have a pretty high clarity rate, and it shows in all the calls that we do on a weekly basis. So the initial liquidity that I wanted to reach for and target, it's obviously being attacked. This was clearly a pretty deep retracement to then set up a discount to a premium. Right? Fooled around in here a little bit. We're approaching the macro. See, we got that deeper level up here, that regular trading hours gap. Like I said, if it can get up above here, my attention would be this regular trading hours gap. And obviously, that assumption, you can't get much better than that. Right? Even when it's nasty, looking gross. But we'll see. Right? We got high, low, higher high, sell side to buy side. we're still respecting this wick as a balanced price range. How do we know? Because it's still now above 50%. It dug a little deeper, but it's still above 50% now on a closing basis. So if we move up in time frame, I'm assuming that there will be body closures above. If we move up in time frames, keep going. See? On that 5-minute chart, does that look as convincing that it's going to go short as the lower time frame was? No, it just looks like a wick closing above the midpoint of that higher time frame large wick right there. And it's just off to the races, change in state of delivery, and prices continuing to run. Right, sensitive to that level like I mapped out. So an opportunity was in there. Opportunity was in here. I said this should be sensitive. And the target has been mapped out for you. I told you guys when I would feel comfortable, right? I told you guys what was making me feel uncomfortable and why we had to wait for a little bit more information. So hopefully all that stuff makes sense. And it looks like we're now off to the races, but it's very, very all over the place. It's high risk right now because first of all, it's CPI, but overall, we have a cracking correlation now. Again, we had a market maker buy model. Literally told you guys that if we get above this, that'll act as second stage distribution. Was I correct? I think I was 100% correct in that regard. Did we see it before it happened? We saw it before it happened. So we were able to be flexible. I didn't demand shorts unless it was to break down below this and then respect it, which it didn't do, right? This stop run in here created high resistance. So price came down, ran a high, attempted once more, and then failed. And then again, it triggered in. Once it broke this high, it triggered in my interest to get up into that deeper level up there. And now we're just racing up there. So now we're finally getting into the macro. It's interesting that this happened well before the macro. I don't necessarily like that. If this would have happened at this time at 6:45, it would be a different story. I would have looked at engage, but again, rules are rules. You're either going to follow your rules and be disciplined, or you're going to break them and pay the price. The pain of discipline means, okay, you're going to miss a couple moves here and there. Things will look really, really good. You'll call it, and then you just won't engage because you're staying within well-defined rules, right? You're either going to deal with that, or you're going to go on tilt, overtrade and over leverage, be a reckless gambler that gets physically and financially removed from even being able to participate as a trader. Not many people, if any, can do both. You can't be disciplined and a reckless gambler. Those two things just can't live together. Yeah, I'm under the impression that we may end up seeing this turn into a buy model overall. Again, same thing here, right? As we looked down the lower time frame for that smaller market maker buy model, we also see the highs up here to the low. If we're expecting it to go to the buy side, we have accumulation right there. So all of that, this upper level here, if it trades through that, it's going to have to act as inverted balanced price range, like we discussed a little bit today. See, I'm very curious, given the fact that the Dow specifically has been so aggressive to the downside. Very curious to see what's the dollar doing here. Dollar's still kind of just It's not really doing too much exciting price action here. So we'll see what it wants to do. We still got the currencies declining. So there's a pretty large lack of market symmetry going on. I mean, if the indices are going higher, that should pull the currencies higher, and the dollar should go lower. The yield should then go lower at that point, and then the bond should go higher. You know, if we're in a healthy environment. Right now, we're not in a symmetrical market. So you kind of have to just go off of price action, right? What it's doing in your current asset. And if there's a cracking correlation, not only with the supporting assets, but a cracking correlation with correlated assets, like the Dow going lower and the Nasdaq going higher. I mean, things are all over the place. So how are you supposed to gauge using our detailed process, or the process that ICT teaches, to gauge high probability? You're not able to really have some of the things that make things super high probability. So again, we are going into 7 a.m. So this run higher, attempted to get up there. You know, maybe this turns into a sell model now, right? We went from potential buy model that eventually unfolded to potential sell model that failed to buy model that worked out, which we outlined. And now if this breaks down aggressively, right? We've now turned this high resistance liquidity down here, right, into low resistance. How did it do that? Well, we have a stop run, price rallies up, hits liquidity. After it fails and leaves a failure swing there now. So this high resistance that got traded into and failed to be purged, if this does decide to go lower, is now low resistance. So you can see that things kind of fluctuate from high resistance to low resistance, and it intentionally sets up scenarios that go from one side to the other. All right, one side being high resistance against a stop run, to then presenting us with a failure swing. And if a PD array is met, like this bearish order block here on the daily chart, well, on the 4-hour chart, if we get a response away from that, in this case, it's now set it up for low resistance. So if this is going to drop in here, this should not be traded back through. It should hold here and go lower. We got buy side, stop run. We have SMT, aggressive Dow going lower. We got the dollar going higher. This may be inducement, right? Accumulation, possible manipulation, and then we may see distribution. And then once this gets down below this low here, it may just blow through it if it goes down there. But if it gets down below that, you could then look for a retracement. This will be a bearish breaker, low, high, lower, low. So if you can't take a trade in here, which again, it's high risk right now if you want to engage. But if it drops from here, then you can, rethink about taking a short when it gets into here, and then you could try to seek the further sell side points of interest, like the 16-hour fair value gap here. Whoops. Because we've got a pretty clear cut fair value gap down there. That's assuming that this is not going to hold, which for now it is holding. So we've got to keep tabs on that. The whole intention to start the week, right? You guys remember what I pointed out? I wanted to see if we can get down there, tag this, and then go. If it's super bullish, then price won't really have to go down that deep. It'll just go to the first fair value gap here that's available and then go higher. We're stuck in between this order block and this fair value gap. All right, so 16-hour bearish order block. Traded into it. You can see the response there. And now price is trading into this range that it just delivered. You can imagine too, if they're trying to go short, I mean, this is logical for them to run up here on this bigger time frame, came up, swept that out, and now they may look to head down towards the sell side, because this may be their intention to target this fair value gap. But we'll see what happens. All right, we do got a fair value gap in here. And this is the potential distribution area. So yeah, if this is going to be bearish, we should not get above this. If it breaks outside of this range, above that high, right, of this little distribution area, then obviously it may look to continue to try to fill in the rest of this. But this stop run here, seeing the intermarket relationships as they are, S&P dropping, Dow's dropping, dollars going higher, it makes it highly likely, given the fact that they set this up as low resistance, for them to want to come down and try to take that out. So we'll see if we can't get them to do that. We're crossing over the first presented fair value gap here, so that if it's going to be short, it's going to have to respect that and go aggressively away from it. Yeah, we'll see what happens here. Yeah, dollar's still on a rampage. We're at that low of the regular trading hours gap. Okay, so now we're taking out stops. We're turning back into this. So again, it's going to have to be very sensitive here if shorts are going to be even considered. And if this gets below this, we then have a breaker to engage. And then I'll look to go short below that. But if we just keep this up, I mean, think about it. It's all over, right? The correlation is a mess right now. This is very wide swings. Yeah, higher time frame is king, right? So we're not just going to assume that shorts are going to take place. We are still holding this. We would have to get below this for me to even want to take a short at all. Otherwise, we're just going to keep going up. Very high resistance. How do you know? It's consolidated and we have deeper tracements. Stops are being taken, but we're coming right back to the middle of a range. Okay, so we're inside this order block here. Let's see what happens. This order block, if we break down below this as well, this order block then creates this like duo in here, right? An order block that has an order block within it that creates a propulsion block, ICT propulsion block. So if it breaks down below that, it's another reason why we should really not see this try to go higher again. So yeah, we're still inside that macro. Buy side's been purged. So we're at the low of the regular trading hours gap. We just took stops on that 1 minute chart and now it's breaking down in here. So again, this becomes a bearish breaker. So yeah, let's see what it wants to do here. It's going to have to be very dynamic here. Got PPI tomorrow. Okay. So yeah, that's a breaker right there. It's very hesitant to try to get down here. Hopefully it'll open up a little bit. Again, we are inside this bullish PD array. Whenever you're trading into a bullish PD array and it's going short, that's going against what the functionality is of the specific PD array. It should go higher. So if you're trading against it, to get through it, many times it's high resistance. Unless the overlap, like underpinning of the narrative is bearish in this instance. But it's not. The underlying narrative is still bullish, right? It's still declined to go to the buy side potentially until we break down through 3 PD arrays. But you can see that that's, you know, doing what we anticipated. If it got below this low, it's respecting it. And again, it now has low resistance liquidity here. So it should be able to slide on through that. So we'll see if we can get that. There she goes. So talked about a buy in here, rallying up to the midpoint of the regular trading hours gap. Talked about in here, be reasonable to take a short to then target low resistance. And it's sliding through this level, basically confirming that the identification of this being low resistance was actually true, was a fact. So we'll see if we can get all the way through it. Given what it looks like here, it looks like it will. We got a low, high, lower low here. So if it's going to dig a little bit deeper, we should use this as a bearish breaker. Should be able to support that. See if we can't get it to punch on through that. Yeah, I don't like how the Dow already swept. I hate when it, in these correlated assets, when one or two of them already hits their liquidity pools. I hate it when it does that and it starts retracing, because many times the Nasdaq will fall victim to that type of overall delivery. So now we're about to pierce through that. Did I already get through it? Yeah, I got through it already. And that right there, beautiful trade. Beautiful trade, if you ask me. So the buy in here worked out beautifully. The initial one that I said I don't want to take, right, because the timing, that was obviously not something we wanted to participate in. We talked about how it should hold that. Talked about how we got to be very observant when it goes through this, if it was to do so. It hung around in there. All it did was use this as a discount to then rally up to a premium, took out our initial buy side liquidity pool. All of this stuff that's happened, we've mapped out from start to finish, from analysis to entry, from anticipation to contingency plan. Right? We talked about all this stuff, and it's hopefully been clear to you guys, because I made it pretty clear, and it's all worked out pretty perfect. So again, if you guys got any questions, you can obviously let me know. But again, hopefully you guys were able to fully walk with this with me, and hopefully it made sense, because, you know, I guarantee if you go to other live streamers right now in this type of condition, they are shitting the bed. Like, they're probably not knowing what the hell they're doing. You know, appreciate you saying that, Maddie. Good morning, everybody. I didn't even realize a lot of you guys hopped on right now. Good morning, Jen. What's up, Byron? Freaking brother. Let me see who else. Yasin, if you're still here. Good morning, if I didn't say it earlier. Yeah, this was flawless. A little bit of a chaotic mess in here. You guys remember I said, okay, well, this is at the open, but I mean, it looks like it could be a bearish breaker, right? Accumulation, manipulation, distribution, rebalance. Even if you would have focused on that and were okay with being aggressive, you still could have caught that, and that's 20 points. 50 points, actually. Excuse me. Right? We talked about this too. I wasn't going to take it because it was too close to the open. You see what happens when you wait for the open price to come out? Do we miss things? Yeah, sure. You could say you missed this little move here, right? You could say that, we maybe missed this move here, right? You could say that we even missed this move because it was still not right at the macro. It's at least 645. But aside from those ideas, this was the best move here, right? It was the fastest move aside from this one. But the rules are the rules. I don't break my rules. I'm not perfect, so sometimes I'll slip a little bit, but I know when I could bend the rules and when I got to stay on the rails. And most of the time it's best to just stay on the rails, especially when you're brand new or just trying to learn and get familiar with stuff. For another thing too, this low to that high, I talked about this being another entry as well. We could see that it's offered another 20 to 30 points from that, another 50 points offered. So I called this buy in here. I called this short in here. And before this even happened, I said if we get below this low, it should be used as a breaker as well in itself, and it should go lower. And so we called that one out as well. Pretty much every trade except this one, I think that one even worked out in there. But there's really no model. Well, yeah, it went 20 to 30 points. That's all we aim for. But if you would just use this wick as your PD array to enter on, trusting it as a balanced price range, which is something we talk about, that is a model in itself. This is a PD array, a wick followed by displacement. That's a balanced price range. So in a balanced price range, if you understand them and practice with them, whenever you see them, you can go off of execution with that, right? Just add like an order block or something in the midst of it, or a fair value gap. If you're correct on narrative, it could be this simple. You know what I mean? But it all comes from the draw on liquidity. Do you know how to call the draw on liquidity? Do you know where price is going to go and why? And that is what I do here publicly every week. I talk about what should happen on the higher time frame, Sundays, get you prepared for the week. And then these Tuesday calls, we're live and I walk price with you. And generally this is the result. We're calling out moves that work. Again, I'm not here to put you in trades. I'm here to teach you to put yourself in trades. And so eventually you guys hang out because, you like to hang out, right? And you want to help me provide value to people. There's no codependency. Like Christian has to be live in order for me to do stuff, or Joe Schmo over here has to be live so I can copy whatever the hell he's doing. We don't want that. And I try to push you guys away from that. People don't like it sometimes, but hey, the same people that don't like it are the same people that are going to fail and continue to struggle for much longer than they have to. And that's just the facts. I think I laid it out clear enough for you guys to know where I was potentially considering ideas. Literally, I said when it takes this high out, if it does, that'll be a potential idea. I said if that's not something you engage, you can also look for this to be a bullish breaker, right? It ended up being a bullish breaker in itself. And it just went right to the target. What target? 50% of the regular trading hours gap. I talked about how this low here, price traded into that. We had a stop run here. That's high resistance. And when price came down like this and rallied up, that now created low resistance. So if it was to come back down into that, it should be fast. Once this breaker showed up, I knew it was going to be pretty fast, right? So we not only talked about framework to setup, higher time frame narrative to lower time frame. Time, right? We've talked about time too. How I didn't want to take a trade at 6:30 because of the rules, and how I didn't want to take pre-market trades because it's part of the manipulation. And then we talked about liquidity identification, right? And overall liquidity classification, and how one high resistance level of liquidity can then be used as low resistance once price sets it up in that way, right? So this is a jam-packed call that we did this morning. And I mean, if I leave it here, I've already called out 3 profitable trades that worked out. You just have to decide which one you wanted to take, right? Seems like this one was pretty short-lived in here. But again, it did offer 20 to 30 points. It's CPI day. All you need is 20 to 30. Don't hold for much longer, especially if you're not consistent yet. You know, you got to build up to it. You know, this delivering lower here is still a drop that's inside the delivery, retracing on this higher time frame into a higher time frame PD array. So if we can get this to reject this, that means that this higher time frame fair value gap is now acting as an inversion. You see the buy side, sell side, buy side, sell side, buy side again. Once it leaves that, this is a balanced area in price. We have displacement followed by displacement, closing it in, entirely in. Okay. And now we're retracing into that. So again, if it leaves it, that's a balanced price range. We had this buy side, sell side overlap, closure below the close on this candle, right? When you have a displacement, if you have an order block and you get displacement that closes on the displacement candle below the open of that order block, whether it's bearish or bullish, many times that's a balanced price range, and the next candle should deliver away from it. That in itself is a model. That's my momentum order block, right? You can see it here too, right? Right. Down close candle, displacement that closes outside of it. The next candle, it can return into it a little bit, but it just goes, takes off. You got another one here, right? Order block, displacement that closes outside of it. Next candle does what? Delivers. Same thing here. Order block, displacement that closes outside of it. After a stop run, very important, after a stop run. Next candle trades into that range a little bit, respects it, and then goes. Right? Obviously, it'll still set up, even if that's not what takes place at times, because there's other PD arrays, obviously. But if you're looking for something like this, it's just another good reinforcement, right? This closed outside, right? This right here, this body of this candle, stop run, price closed outside of the open right there. And so what happened on the next candle, it traded into it and rallied. So it's just another one of those quirky things, right? Like another example here. Order block, closure outside the candle completely, right? Outside the low. Price returned into it. What did it do? Respected it. Couldn't even get into that. Why? Because this is creating a balanced price range after a stop run. So it's just another way of looking at order blocks. I call this the momentum order block. There's many variations of order blocks, right? Many different things, little signatures in price that afford a PD array to, respond in a stronger or less strong way. But this is one of them for order blocks. Okay. So regardless, if we come back to this, right, the 8 hour, we got buy side, sell side completely. So if we respect and can't get below or can't get back above the 50% of this, right, this higher time frame fair value gap, we'll just keep going lower, right? We had a market maker sell model. That's another thing we talked about today ad nauseum. Market maker buy model, market maker sell model that failed. Displacement, turn this into a market maker buy model, right? So failed sell model to take the low out, completed buy model to take the highs out, reach for the regular trading hours gap. This also not only reached into the regular trading hours gap, that level, that high, hit the 50% of this higher time frame bearish order block here. Look how precise that is. %50 of that higher time frame order block, in conjunction with the fact that this had displacement closing outside that candle, right, the open, after a stop run. This is also inside, if we go to the other chart that I have here, it's also an extension level that we mapped out as a target. I forgot which, was it here? I think it was here. This is our extension. If you've been with me watching what I've been doing, showing up faithfully, those of you in my private group, it's hard to avoid this stuff, but those of you on YouTube, if you've been just with me, you've seen that I've been calling this out. Right, but we have the extension level up here. Oh, it's a little bit offset. So from this low to that high, for that extension, we have perfect target right there, right? Perfect extension. 2.5 standard deviation. Once it got up into it, it retraced a little bit. It's typical. But the full price swing, 4 to 4.5 standard deviation, has now been tagged and then triggered a change in state with that higher time frame level right there, that order block I just talked about. Okay. Displacement that closed below it, below the open. And then a lower time frame or internal range liquidity, not lower time frame, but internal range liquidity. External targeting, stop run, standard deviation, full 4 standard deviation, which is a full price swing. And that ironically has now instigated a retracement, reasonably sized retracement. Going into what? A higher time frame PD array, internal PD array. Okay. So there's been a lot of stuff that we've talked about today. It's literally 7 o'clock. We've done literally so much stuff already. It's just now the silver bullet window. So there's probably going to be more stuff to trade. This is probably the more difficult portion of the morning. Whoops. You know, things may start to open up a little bit easier. It may get even more clear, right? Not that it wasn't clear already, right? There was times where we had to just kind of wait because it was still in this range, not really trying to do anything. It was being pretty sporadic. But we had a pretty good idea of what it could or should do, right? And we called out 3 trades already this morning. So I'll stick around with you guys for a while. But yeah, you know, we see this response off this low here. Let's go take a look at these in here. So the Dow took the stops. Nasdaq took the stops. The S&P has failed to take the stop. So that's SMT. And we'll see what this next, what this 4-hour candle is going to do here. This is a new 4-hour candle, so that new 4-hour candle means new power 3. So we got our 4-hour open price down here. What did it do? It opened up, dropped lower, swept them out. And now it's starting to aggressively reprice back inside this order block. It has a huge wick. Midpoint of that wick, we'll see if it can get back below it. But honestly, there's that SMT. Let's go see what the dollar's doing. We got the dollar kind of turning a little bit. Came right to a level that we mapped out, a liquidity void. Maybe we'll be able to still get this to drop. I mean, look at this. These relative equal lows. That's pretty insane. It's pretty crazy, don't you think? It's a pretty obvious relative equal lows right there. But again, we have to make sure we're really, really paying close attention to the bonds and yields right now because they have a heavy impact. Heavy impact. So if the yields continue to go higher, the dollar will, at some point, you know, for the most part, continue to support the buy side delivery. We have reason to do so as well. The continued gaps in here. We have this, which is a gap too. up here. That one's got buy side, sell side, so it's pretty much fulfilled already. And we have sell side from this high to buy side up to here, but it's inefficient essentially from this level to that level for buy side liquidity being offered. There's no bullish candles in there. It's all downside delivery, so it's inefficient. So if they're going to go up, that's going to be the reason why. And then, of course, we have that extra layer of inefficiency there as well. So those would be my overall targets for dollar. If it does decide to say break above this and break this high, we'll see a bullish breaker. We'll see a balanced price range, high, low, higher, high. And then I wouldn't be very surprised if we run up. And because of the time of year, sell-in may go away, right? Because of that likelihood, which is very consistent over the last 10 years, it'll be supporting a retracement that's long overdue in the freaking Nasdaq. I mean, it's just been parabolic, right? We've all seen it. So yeah, we'll see what happens, right? We have, again, this large wick followed by displacement. If it's bearish, it should hold on a closing basis at the 50%. So we do see accumulation, manipulation, distribution, rebalance. We're in the rebalance phase. Accumulation, manipulation, distribution, rebalance. And then we should get redistribution. And if it breaks down below this, right, it should be able to treat that as an order block. And then we may continue to see things go lower. If this 1 hour candle closes inside this order block, I mean, the wick's already in there, right? So if it closes like this and then we break that, this becomes a propulsion block after a stop run in a logical retracement. But yeah, it's definitely a very wild situation in here. I mean, can you imagine what the YouTubers on the internet are doing right now? All the ones that don't really sincerely know what's happening. Can you imagine them getting, like how they're behaving in this? They're probably getting blown up. One thing to keep in mind too here, we have this here, buy side. So that's accumulation. So this may be the origin of the move. So it may be a market maker buy model again. So if it gets above this candle here, I think I'll keep that wick intact. Actually remove that. I think I'm going to keep that there actually. So yeah, if this ends up getting up above this, we're going to treat it similar to how we treated this. So we should see this. Got that upper 75, upper 50s, 75%. So if it gets above that and comes back down into it, it should be able to hold that if we're bullish, right? If it does want to go through. We also have this bullish order block here if it wants to get above that and close aggressively. I'd prefer it to close aggressively up into that if it's going to use this as an order block. The 4 hour also has an order block in itself too if it closes above it. And we have a change in state of delivery here. How do you know that's a change in state? Because look at how it treated it on a closing basis. Got a high, low, higher high. We got sell side, buy side should be balanced down here if it's going to go to the buy side. We should be able to visually see that. Sell side, buy side. Back inside that first presented fair value gap. Many times when it trades to and through it like this, numerous times, there's going to be a time when it returns into it and then it is used as a launching pad and then just blows up. Again, if you guys did something and it was positive, there's no real reason for you to then look for more setups. You got to take what the market gives you and get out, especially on CPI day, on a week that's NFP, FOMC. I mean, we got big changes coming to the Federal Reserve because of the new guy. So it's going to be a lot of pretty interesting dynamics taking place. So yeah, let's see what it wants to do. Let me see. Mike said CPI number. So it's important to be patient, perhaps. Not even trade. Wait, smart money. Yeah. Yeah. Let's see what it wants to do here. This should also be a sensitive level if it's bullish. Remember, we're watching how order blocks behave if price is moving, say, in a bullish direction. For us to continue to gauge real-time order flow, we have to identify, okay, well, there's an order block here. How's it trading that? There's a breaker in here. How's it trading that? There's wicks. When it trades into them, how's it trading that? Are they respecting the upper portion of these levels? Or are they just absolutely smashing through them and just refusing to hold? Right? That real time tells you a lot about what price is willing to do. You know, for now, we're in seek and destroy. Consolidation, run higher, drop lower, run higher, drop lower again, right? So So we'll just be monitoring this. We're now below that first presented fair value gap. It's going to have to get back above and stay above in order to trust that we may want to take another run to the buy side. Again, higher time frame narrative wise tells you a much clearer story than this shows you. This is the importance of being on that higher time frame. You don't ever want to be just stuck on those lower time frames. For just looking at the 1 minute chart, I mean, you'll think that, oh my gosh, like it's all over the place. I don't know what's going on. When you look at this, right, it looks like it, you know, it's respecting this up here. But overall, it's just a retracement that may look to continue to go higher overall. Does that mean today has to go higher? Of course not. It's already looking like it wants to retrace, right? But it's easier to gauge kind of what price is overall doing when you focus on the higher time frame for your narrative, and then the lower time frames you use just for simply engagement and risk minimization and just overall active framework to engage. Each time frame has its own role, right? Yeah, this here is clearly looking like it respected that. So we may look to attempt one more smash lower. We framed out this. If it would have got above that, that would have been treated as a market maker buy model second stage distribution. But now it looks like we've had a pretty solid respect here. We had a breaker that formed right inside that first presented. This is not really holding here. We'll see if that continues. Right, this like wick, potential bullish breaker. You could see a small potential market maker sell model in there. So this is going to go lower. It should respect that. Assuming that this is the move that pushes us. We're outside the macro now, so you know, a lot of times it could be kind of chaotic. But keep your eyes on this. Let's study this as a potential market maker sell model. Attempting to get below the low one more time. You notice that we're just staying inside that higher time frame fair value gap. It's very reluctant to get through it. So you got accumulation for this current 4-hour candle, accumulation, manipulation. Looks like we may be presented with distribution for this 4-hour open price. Accumulation, manipulation, got us simply into an order block at a premium. And now it looks like it wants to continue to decline. So that little area, like I said, if it's going to drop, we're looking at market maker sell model. Now you got to ask yourself, is this something that you would have felt comfortable engaging? Told you what it should do if it's going to be bearish. Has it done that? I think so. If I didn't take a trade earlier, I would have engaged this. Again, this isn't hindsight. I'm not talking about this after the fact. I just literally put this box there and said it should hold if it's going to go lower. Right? So yet again, yet another one. I mean, that's arguably a better move than some of these other ones. This one was definitely the best, though, that we called out. You notice, too, that possibility of this being set up as a market maker buy model was there. But what happened? You take this high to that low. If that is the market maker buy model range, actually get this off. If this is the market maker buy model range, and that's equilibrium from that high to that low, when price runs up like this and we get above the equilibrium point and we break back down below it, so it got above it once but refuses to get back above it in the buy model assumption, you then have to immediately, if price does this type of stuff, you then have to immediately, if the 50% gets broken for this range, start to think that price may look to go the other way. And this one may fail. And if a market maker model fails, if the market maker model fails, in this case a buy model, we're more than likely going to operate in a sell model. And then you could just position like I just had you guys position here. Right? This is called the tactic that I'm using here and just taught you guys, which nobody else teaches. I call it the market maker model flexibility protocol. And this is a perfect description of it, perfect example of it, and why it's so impactful. Because maybe you looked to buy and you took a buy in here for whatever reason and you lost. Okay, great. Well, when price breaks down like this, you have another opportunity, especially if there's a deeper level like there is here. Which again, this is a level that we identified on Sunday, right? And now it's been fulfilled. So from Sunday's call up to today, everything that I've outlined was correct. I said that it's most likely going to give us some, here, let me actually take all that off. I said it's most likely going to give us some kind of retracement because we're at that 4 standard deviation. So that's what I'm going to go in expecting for price to do. And if it's bullish, it's going to come down to there, tag that, set the low, and then we'll start to just really, really rip through to the buy side. Here's another example of that the momentum order block I talked about. Kind of order block, displacement, closing outside the open. Price never even came back to it on this one, right? It just exploded. Where did this explode from? 50% of the wick. What did it do before it exploded? It took stops. Best moves come from stop raids, right? If you go back and look at the best moves you've ever seen, they all have a stop raid attached to them, right? Stop raid attached here, stop raid attached here. Even on a smaller scale, most of the time it does it too. Right? Stop raid here, rally. Stop raid here, decline. Stop raid here, rally. Stop raid here, decline. Even a stop raid here, decline. There's a high right here, stop raid, decline. And then, of course, stop right here and then decline. It's freaking allergies, dude. Freaking dry weather where I live. Ugh. Brutal. But yeah, that sell-off right there was pretty spectacular. The rules are the rules, right? If you take a trade and you win a trade and you're profitable and you hit your goal for the week, like your daily goal, or if you've met your weekly goal, you need to stop. You don't got to take that advice. But if you suffer from over trading and over leveraging and making money, losing money, making money, giving it all back, these are things you have to really, really reason with. Because more trading will never, in the history of trading, equate to more profitability. It just won't. So yeah, 7 o'clock, beautifully unfolded. Set up a beautiful move right there. Market maker sell model. Do you guys notice that we've literally talked about market maker models throughout the whole entire time we've been talking about trading today? This is something that I'm going to shift my teaching more towards. There's a lot of different things that I talk about and lots of different perspectives that I have. But on the back end, my entire perspective is focused on market maker models, right? It's like at its core, it's market maker models. I've mentioned this before, but people over the years, it seems, have understated the importance. Even when I talk about the importance of market maker models, people put it to the side, trying to chase a lot of shiny objects. You need to understand that the best model that ICT has ever created for not only entry, like here, but also framework and price navigation, there's two, right? There's power theory and market maker models. And those two topics can be expanded upon more than you could even imagine. And being able to be with someone that employs this like this, I'm not the only one, right? There's 2 or 3 other people that I know in terms of educators that also have the same perspective because they saw the writing on the wall when they first learned about market maker models like I did. And then the whole focus went from what they were studying to, okay, this is where, even ICT says it's where the holy grave is. Market maker models are the holy grail of ICT concepts for most people. Not everyone, right? Because not everyone is the same. But maybe you don't use market maker models as an engagement tactic, but you use it as a framework to then find your engagement tactic that you like the most, right? Maybe you just use market maker models for bias and narrative. I know 2 students that do things with market maker models in that regard. I don't know why, right? But that's just what they choose to do. But there's so many things that this benefits you in your trading with, right? from bias and narrative to validation of a trend. If a market maker model fails, I've talked about this before in a previous live call, but when a market maker model fails, most of the time it's going to set up the other one. When you get to second stage, or an assumed second stage, which is what this would have been if it would have taken the high, and it fails, right, and then breaks down below 50% here, this is one red flag, right? One red flag is here if it can't even set up the second stage before it displaces aggressively against it, right? And then the secondary key element, if this rejection and refusal to create the second stage distribution unfolds and we break towards the 50% of this and we peaked above the previous equilibrium, I'd say 80 to 90% of the time this is going to go the opposite way. And I'm not just saying this. I mean, I talk about this all the time, or like I show it, right, in price. When I decide like, okay, well, price is not going to go this way, or, it's going to continue, right? I mean, there's really specific reasons why when we hop on these charts and we call bias and narrative, why it's so consistent. Most of the time, pretty much majority of the time, it comes from this type of logic. I talk about a lot of stuff. I have a vast library of information in my head about ICT concepts over the last almost 7 years. So it's like, it takes a little bit of time. And the more stuff that you can understand, the more simplistic you can make your trading over time, especially with experience. Right? So again, if you guys didn't get the point before, hopefully you get it now in terms of the importance of market maker models and why it is deserving of your time. You should spend unlimited amounts of hours that you possibly can every waking moment until you understand the dynamics, which I hope you guys that have been with me for a while are starting to understand the importance and the dynamic behind market maker buy and sell models and the use cases and how they are useful and how we're always in one of these models, and then how it can also associate to your entry tactic, right? Like there could be London accumulation or Asia accumulation, London accumulation. The New York session shoots higher, and the higher time frame is bearish, right? Assuming, let's just say the higher time frame is bearish, and you see this unfold, right? Asia is slow, London, it's kind of choppy, it bounces around a little bit, maybe it drops a little bit. But then we're in a higher time frame bearish trend, and when we get into AM session, it shoots up like it did here. Right? Well, if you're in a bearish underlying narrative, which there was a chance for it to do that because I pointed this order block out, and the likelihood of it trying to reach down into here, which it has done, right? It's did everything we said it was going to do. But in New York session, it rallied up. So that created the new high. Let me see, is that the high of the day? Yeah, London, and New York attempted to get us back up to a new all-time high. So it yanked people in that are unsuspecting of the likelihood of this retracement. And then what happened? Price broke down below 50%. What did we anticipate? We wanted to see this hold. If it was going to go short and target the equal lows here, after it engineered low resistance down here, if it was going to go short, it needed to stay below that. What did it do? It rallied up one more time, still respected this up and down movement as a balanced price range. We see another wick right here. Trade up into it, respected it. And then it broke down, creating a bearish breaker, creating respect to this balanced price range here, the buy side, sell side, plus the wick with displacement. At a higher time frame PD array, inside of a macro. So time and price, right? And then we closed below the midpoint. So then we think about market maker models. Closing below the midpoint. We went above it for a little while, but then it got back down below it. So that makes me rest assured that I'm going to target the lows here. And then executions can be born off that. And it was low resistance, like I assumed it would be. And, like I, taught you guys, right? This is a level of engineering liquidity, things that people don't really understand. Most people think that the engineering of liquidity is just like when price rapidly runs away from the overall narrative and turns around. Well, there's little quirky other things that take place too, like high resistance being traded into, price reacts away from it while the underlying narrative could still be potentially bearish, right? It left that creating a failure swing, dollars going higher, and then it came down, attempted to target that after all these other things that I just laid out unfolded as well within the right time, right? And you could see that it unfolded like that. So there's a lot of different things that overlap one another to make market maker models even more effective. That's why when people just learn market maker models and that's it, it's still difficult. It's still hard to get around price, right? And it's inconsistent. There's many different variations of market maker buy and sell models. They look different every time, but the components and the characteristics and non-negotiable rules, like if the second stage fails to get hit in a buy model and then it breaks towards the attempted buy side delivery here and it closes below 50% of this, closes below 50% of this leg of price here, but then also the assumed buy model that failed. When it closes that, it's going to most likely reach for that lower level. It's not going to continue. And if it does continue, it's very low probability. And there's something going on in price. It's a shitty market, and you're probably going to take a loss. Right? Most of the time, though, things operate the way that they should. Okay? So again, I hope this stuff has made sense today. I'm not going to keep you guys much longer. Appreciate you guys hanging out. Hopefully you guys got value. Let me know if you guys have any questions about anything. I'm always here to help. Those of you that aren't in my private group, if you want to do this type of stuff with me every single day, the QR code's up on top of the screen if you want to see details about that, or you can go in the link in the description. It's not for everybody, right? If you're not serious, if you're just like casual observer, it's probably not worth it. But if you want to change your trading and you want to learn this stuff, and if this stuff made sense and you got value from this, and you think you can get value from doing this more and being exposed to this type of experience more, that option is always available. And of course, if you decide to just stay on the YouTube channel, you'll still get value as well. I don't hold back, right? I'm here to help every one of you, but I got to have that lane for traders that may need more help, or just want to have more of a dynamic one-on-one type of experience with me, because I have answers for most stuff. I'm not perfect. I don't use every concept, but what I do use, it's effective and it's transferable and it's flexible. So no matter where you're at, no matter what model you use, even if it's retail concepts like trend lines and whatever, you could still find value in the things that we do, right? The things that we employ. So just some things to consider. But again, appreciate you guys for always supporting the channel, supporting me as a mentor. Hopefully you guys got value from today. We'll be live again here on YouTube on Sunday again. And of course, next Tuesday will be our next live call. And those of you in my private group, I will see you beautiful people bright and early tomorrow. I may hop on a little bit later as well. I just got to go see my daughter for a little bit, and then we'll come back. But I'll let you guys know. But yeah, that being said, God bless. Hopefully you guys got value. Don't forget to like the video, subscribe to the channel if you haven't already, and spread the word if you feel inclined to do so. Helps me get in front of more people and continue to try and do my part in changing people's lives in this industry and show them what the realities are in trading, right? And how to actually trade, right? All right, with that being said, God bless you guys. Thanks for the love and support, and I'll catch you all in the next one.